Are you tired of losing money day trading? Then stop trading! There, that was an easy video. Okay, in all seriousness though, if you're here, you're not quite ready to give up with day trading, and I think we have some information that can really help you out and improve your trading. Day trading is really difficult, and I certainly know how frustrating it can be when you feel like you're not making any progress. Sometimes though, we are our own worst enemies and hold ourselves back. No, I'm not talking about your childhood trauma causing you to self-sabotage. That's not it. No amount of psychology can make up for a lack of edge. It's like trying to say that the reason you lost to Michael Jordan in 1v1 was your psychology when you can't even dribble the ball. It sounds ridiculous, and yet that's often what retail traders do. I myself fell into this trap early in my trading career, and most retail traders that I've worked with do this to some degree. They're missing critical components that should be a part of every strategy. There are key things you need to be competitive, otherwise you're not really playing the game, you're just watching Jordan dunk on you. So today we're going to talk about some of the common components that are often missing from retail trading strategies. I'll give you some tips on how to improve these skills, and I'll show you some tools that will help you out. Also, make sure you stick around till the end of the video because I have a new free resource for you that you're really going to want to check out. Now, what we're going to talk about in this video is a lot of stuff that frankly I found many people just don't want to hear. Like, I'm not going to cover much about psychology and risk management here, even though those are critical components of a successful strategy, because everybody talks about that. I'm going to be talking about the things that people often ignore. We get these preconceived ideas about what trading is or what style of trading we want to do. They become a part of our identity as traders, and holding on to them can stunt your progress. Sometimes we need to let go of what we think we know and just focus on the basics. So let's begin. An incorrect understanding of the markets. The biggest problem we deal with in the trading community is so much of the information in trading out there is complete nonsense. One person will share their theory of markets and then others regurgitate it without ever really testing it. Such theories usually focus on either market psychology or the supposed manipulation of markets by large players. This makes these resources popular because people naturally gravitate to that. It's more comforting to think that someone else is holding you back than it is to admit that perhaps everything you know about markets is wrong. What most retail traders don't know is that we live in a golden age of empirically backed market research. It just gets ignored because it isn't what people want to believe. So what does this research tell us? Well, for starters, it suggests that the rules of the game are a better explanation for market behavior. Things as simple as the use of a limit order book to facilitate trades leads to statistical behaviors that can be explained mathematically. Think about it. If it was really all about psychology, then wouldn't participants eventually catch on and start behaving differently? Behaviors that are created by the structure of the market, on the other hand, will always be there. There might be some heavy competition to take advantage of them, but as long as the rules don't change, the behavior should always be there. Our research also suggests that some of the most powerful forces in the market are very price insensitive. For instance, people contributing to index funds through their 401ks. That index fund needs to buy or sell shares based on contributions and redemptions that month. They don't care about the patterns you see on your chart. They have a certain amount they have to buy or sell that day, no matter what happens. So from a day trading perspective, it often makes more sense to just focus on trying to predict what these institutional order flows will be. Now, I have a lot more information about this stuff on my channel. I'd recommend checking out my order flow playlist, especially those last two videos about the stylized behaviors of markets and inelastic markets. I go into a little bit more detail about the specific behaviors that we see in markets and the research behind it all. That way, you know you're building on a foundation based on empirical research. It's so important to build that foundation on information that you can verify and early on. All of your experience from watching the market will be built on top of that. And the last thing you want to do is build on something that is completely faulty and have to completely rebuild from scratch later on. So do yourself a favor. If you come across information about day trading that isn't backed by empirical research, Just ignore it. Number 2, and this is a big one, you're not paying attention to the news. I swear, if I see another beginner post on Reddit asking why the market moves so much on a non-farms Friday, I'm gonna lose it. That is one of the biggest economic numbers, and if you don't know that it happens on the first Friday of the month, you probably shouldn't be trading live yet. I can't think of anything that will hold you back more than not following the news. For starters, it's just not a very good idea to be holding leverage going into some of these big events. That'll blow your account right there. But more so than that, you just don't want to pass on one of the strongest sources of edge. Markets are very statistically efficient, but not very informationally efficient. That means that there is way more opportunity for retail traders to make money from just being informed. Large institutions have a very difficult time adjusting their positions in such situations, and that is a huge advantage to you, the nimble retail trader. Such moves can go on for weeks and result in some of the easiest and most profitable trades you can get. Now, granted, being informed is not such a simple thing. You'll need to account for the market's expectations, current positioning, and you'll still have to account for flows unrelated to the news. That's a sophisticated puzzle that takes a lot of experience to sort out. That's why it's so important with this and with really everything we talk about in this video to start building that experience early as a trader. Every hour you spend wasting time on disproven technical analysis strategies is time you could be using to become more informed about the market. I really strongly believe that this one issue holds retail traders back more than almost anything. And there's a pretty vocal group of traders out there that disagree with me and claim you should just ignore the news, but they couldn't be more wrong. These people have no clue what they're talking about. This attitude is actually a well-known red flag among the institutional traders. I've had many institutional traders tell me that if you go to interview at one of the big banks or a commodities trading house, one of their favorite questions to ask you is what you think about current Fed policy. So if you're not informed, they're not even going to look at you. This is really critical stuff, and if you're going to day trade, you really need to follow these things. So if you're looking to become a more informed trader, the first thing I would recommend you do is subscribe to a news squawk. I have an affiliate link in the video description of every video for Financial Juice, which is really the best low-cost solution for retail traders. If you're going to invest money into developing your trading, I would put it there first, and that's why it's in the video description of every video. I think it's that important. Having a news squawk really revolutionized my own trading, and it's one of the best returns for your money that you can get. I would also recommend checking out News Squawk. They're also quite a bit more expensive than Financial Juice, but they also have some awesome free content on their site. The first thing I do in the morning is get on the toilet, just like everyone else, but then I read News Squawk's overnight synopsis that you can read for free on their blog. I'd also check out TweetDeck to get live updates from Twitter. I have a list of recommended news squawks and reporters on Twitter that I will link in the video description. I also recommend regularly reading the various financial news sites to get an idea of what narratives traders are paying attention to. Pay special attention to any info you can find about what the big analysts are saying from places like Goldman Sachs, JP Morgan, and Nomura. It's true that analysts are often wrong, but that's because fundamentals are only one piece of the puzzle. We need to pay attention to all of the order flows that could come into the market. So keep an eye out for reports from flow analysts that discuss things like options and commodity trading advisor funds positionings. You want this research that covers where the current orders are coming from. One of the best places to find this kind of information is Zero Hedge. I know, there is a lot of political junk pieces on that website. I have a real love-hate relationship with Zero Hedge, especially since they blocked me on Twitter for dismantling some of their Bitcoin propaganda. Still, it's just about the only place I am aware of that retail traders can find access to these kinds of analyst reports. So love them or hate them, Zero Hedge is a pretty essential resource. All right, so moving on, the next most common issue I see among retail traders is that they only pay attention to price. It's natural to focus on price because price changing is what makes you money, but there are some big issues with price. Market makers need a certain amount of randomness in the markets in order for them to make money from trading the spread. So they intentionally inject that randomness into the price by adjusting their bids and offers. Remember that markets are very statistically efficient, but not very informationally efficient. The result is a market where even though current prices aren't reflective of all available information, it is very difficult to make money looking for patterns on a single chart. And look, I don't take joy in telling you this. I'm a programmer. I very much wish that this wasn't the case. Unfortunately, my own experience and the experience of countless other quants is that you're just not going to have much success in predicting markets with a single time price data series, and most quantitative strategies incorporate a lot more information than just price. This is where order flow can be particularly useful. Order flow has many strong tendencies that are incredibly reliable. You'll frequently find situations where the price just looks random, but at the same time, the market orders are giving a strong hint about which way will eventually move. Those imbalances are very reliable and persistent. Many HFT market making and scalping robots are relying on reading the order flow to make their trades. When you combine order flow with everything else we know about markets, that's when you can really develop a strong edge that gives you a leg up on everyone else. Now, the best tool for watching order flow is Jigsaw Day Trader, and as always, I have an affiliate link in the video description below. There's just no other way of looking at the data that is as complete and concise as watching it play out on the DOM, and Jigsaw has the best DOM without question. And this all leads us into the next problem that holds retail traders back, and that's only looking at one market. Like I said, you won't have much success with a single time price data series, but having multiple time price data series, that is a different thing altogether. Every market has relationships with other markets that allow for arbitrage and correlations. Here again, many of the quantitative HFT strategies are relying on arbitrage and correlations to make money. Yet, here again, many retail traders aren't watching these things at all. One of the things that just absolutely flabbergasted me during the whole GameStop saga was retail traders alleging a conspiracy because meme stocks had become correlated with each other. There's no conspiracy here, guys. That's just how the market works. The vast majority of movement is correlated, and it's when things aren't correlated that I would really get suspicious. Watching correlations can also inform you about what's going on in the markets. They can help you track down where the money is coming from and going to. Such correlations can confirm or reject your theories about what's moving markets or alert you to new developments. So to help you here, I've built a number of tools that are available in my NinjaTrader indicator suite that I've found many platforms just neglect. And you can download these from speculatorseth.com. You get a free 2-week trial, and then a lifetime license is only a one-time fee of $100. The suite includes my synthetic dollar index, which allows you to calculate the dollar index using the FX futures without having to pay for ICE exchange data. I really can't trade without this thing. Like, how do you trade without knowing what's happening in the currency you're trading with? The dollar is such a powerful force in the market, and you need to keep track of it. I also have spread charts that allow you to chart the difference between two instruments. I originally built it to watch spreads in the treasury market, but I found it's useful in every market. For instance, you can chart the spread between the S&P 500 and the NASDAQ. Track spreads between closely related markets and keep a watch list that can give you insight into every corner of the financial world. And the last thing we'll talk about, you aren't tracking your trades. It absolutely just blows my mind when retail traders don't know their basic stats. Things like win rate, average winner, average loser, Sharpe ratio, etc. How are you going to get good at something without tracking your performance? Here's the thing. The market is really good at fooling us because our brains are just not capable of tracking so much data on its own. You may have heard of Dunbar's number. It's basically a cognitive limit to the number of people with whom one can maintain stable social relationships. And it's about 150 in humans. 150, that is a huge limit in a field of study where, due to fat tails, you might need tens of thousands of trades to verify a strategy. I've always said that to judge the performance of a strategy, you should use at least 5 years of returns. I have a hard time remembering what happened yesterday, let alone the last 5 years. So tracking your trades is absolutely essential. And the best tool I've found for that is Jigsaw's Journalytics. And of course, there is an affiliate link in the video description for that as well. I've been using Journalytics from the very beginning, and so I'm able to look back at all of the trading I've ever done. It is so useful to see how my trading has improved over the years. So don't sleep on tracking your stats. Start collecting that data now. Now, that was a lot of stuff, and I wish I could go into more detail, but sometimes a video is not really the right format to do that. And so that's why I have a free PDF that you can download. So if you go into the video description, you go to the website, put your email in, and it will email you this strategy PDF that goes into everything that you really need to have a complete strategy in more detail. So it goes into the stylized behaviors of order flow and how we can account for those things. It goes into the types of correlations that you tend to see. It's really everything that I feel you need to get started. And really, if you have this information, you're in a really good spot to create your own day trading strategy. Maybe someday we expand this into a book, but for now it is a free resource. Absolutely take advantage of it. What I do can be really tough sometimes because I always wish I could guarantee people's success, right? Unfortunately, the competitive nature of trading means that most people will fail no matter what, and I can't give any such guarantees. All I can do is help you get to a place where you can at least stand a chance. So if you work hard, manage your risk, and build a strategy that incorporates the essential elements we talked about today, you at least stand a chance. So I'll see you guys when I'm live streaming every morning, 8:30 Eastern time. In the meantime, stay excellent, team.